This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Oil prices were steady on Wednesday as fears of tight supply were offset by COVID-19 concerns after Singapore suspended quarantine-free travel and Australia renewed its vaccination push due to a surge in Omicron variant cases. U.S. West Texas Intermediate (WTI) crude futures were unchanged at $71.12 a barrel at 12:50 GMT after jumping 3.7% on Tuesday. Brent crude futures fell 15 cents, or 0.20%, to $73.83 a barrel after gaining 3.4% in the last session.
Ocean freight costs are likely to remain high in 2022 as investors and regulators scramble to accelerate decarbonization of the shipping industry and companies grapple with green financing, sources say. Shipping, which transports about 90% of world trade and accounts for nearly 3% of the world's CO2 emissions, is under growing pressure from environmentalists to deliver more concrete action including a carbon levy. The International Maritime Organization, IMO, the UN's specialist shipping agency, has said it has made progress on short-term greenhouse gas (GHG) reduction measures. But that timeline is not seen as fast enough by environmentalists and a number of the IMO's 175 member countries.
Moving on to the top news in the energy sector.
At least 10 cargoes of liquefied natural gas, LNG, have recently been diverted from Asia to head west, drawn by Europe's record high prices amid supply concerns ahead of peak winter demand, industry sources said. European and British benchmark wholesale gas prices soared to record highs on Tuesday as Russian gas shipments to Germany through a major transit pipeline reversed direction and colder weather boosted demand. Prices fell on Wednesday but remain elevated partially on profit-taking and also as market players realize more LNG is coming to Europe, calming supply concerns.
U.S. crude stocks fell while gasoline and distillate inventories rose, the Energy Information Administration said on Wednesday. Crude inventories fell by 4.7 million barrels in the week to December 17 to 423.6 million barrels, compared with analysts' expectations in a Reuters poll for a 2.7 million barrel drop. Crude stocks at the Cushing, Oklahoma, delivery hub rose by 1.5 million barrels in the last week, AIA said. Refinery crude runs rose by 148,000 barrels per day in the last week, AIA said. Refinery utilization rates fell by 0.2 percentage points in the week.
Next, we have the top news in metal markets.
The United States has enough reserves of lithium, copper and other metals to build millions of its own electric vehicles, EVs, but rising opposition to new mines may force the country to rely on imports and delay efforts to electrify the nation's automobiles. The tension underscores the dilemma facing the United States going into 2022, a year in which U.S. policymakers hope to see groundbreakings on a raft of EV manufacturing facilities from Ford Motor County, General Motors County and others. President Joe Biden signaled earlier this year he prefers to rely on allies for EV metals, part of a strategy designed to placate environmentalists. That means U.S. automakers will find themselves competing with international rivals for supply amid the global rush to electrification.
The European Union will place extra tariffs on aluminium foil coming from China after the European Commission found that producers there benefited from excessive and unfair subsidies, the EU official journal said on Wednesday. The tariffs on a specific thin grade of aluminium converter foil, which will come into force on Thursday, range from 8.6% to 18.2% and come on top of existing anti-dumping duties of between 6.0% and 28.5%. The European Commission, which conducted an investigation after a complaint from EU producers, said that China had identified aluminium foil as a key industry and intervened with the free play of market forces to promote the sector. We will now look at the top news in the agricultural sector. India's year-long suspension of futures trading in key farm commodities is crimping the use of risk management tools such as hedging across its food supply chain, spurring inventory cuts as forward purchases get scaled back. Monday's halt, targeting items such as soybeans, edible oils, wheat, rice, and chickpeas as authorities moved to cool rising inflation, was one of India's most dramatic steps since it launched commodity futures in 2003. But the ban on access to futures contracts may fuel volatility in domestic markets by denying traders the tools crucial to planning decisions, forcing them to cut stocks, delay long-term purchases and sales, and even limit imports.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.